Hello traders, this is Rich Derrick from Tradesight. This is the market preview for Thursday, January 17th. This session was kind of a mixed session. It was kind of split between some strength and some weakness. We had the S&P futures were wound up fairly flat on the day. The Nasdaq futures were higher by 11. And that was really on the heels of finally some positive price action out of Apple. The Dow was lower on the day by about 23 handles. That was definitely weighed on by the action in Boeing. The rest of the market, as far as the overall picture was kind of mixed as well. We had higher oil prices, so oil is still holding above that 10 EMA, and the currencies are starting to flip around here in favor of strength in the dollar. And we'll take a look at all this a little bit later in detail. But first, let's move on to the charts of the ES and the NQ futures. So here are the ES futures. You can see that we had a fairly tight day, and we're still pretty much boxed up within this same range. Technically, though, the market is still holding above the 10 EMA and still basing below this 6/8 level of 1468 and 3/4. So a close above that's going to be kickoff for the next leg if they can put that together and make that happen. There's really nothing to talk about until we exit this range. And hopefully, as we get a little bit further along in the earnings season here, we'll get out of this range. So here are the NQ futures, which were positive by just about 12 handles on the day. But like the ES side, we're still boxed up and contained within this same relative range. Price is still short-term positive, being above the 10 EMA. But again, we still haven't cleared this range and technically don't have anything really to add to just this neutrality until we get out of this range. So here's our multi-sector chart. The key takeaway here, I think, from today is the little bit of a better price action, a little bit of a bump up here in the SOX. But we still had some profit taking place in the BTK. So it was kind of those two key sectors for the NDX were both at odds. So we'll get into the technicals of each of those in just a little bit. But nothing too rotational just yet as far as the NDX versus the S&P until we get a little better clarity and get a little bit more of a follow through from the SOX. Hopefully we'll check in on that a little bit later. The put call ratio did bump up here a little bit in this session, but is still miles away from a climactic reading, so nothing to be concerned about there. And now looking at the 10-day trend, we did pop up a little bit from the previous reading, but we're still pretty well in the neutral area here, neither overbought nor oversold. So there's gas in the tank for a movement in either direction once we leave this range in the S&P. Okay, now on to our first sector. Here's a look at the semiconductors, the SOX. Definitely the top performer on the day. Was up a little bit more than 1%. I'm sure a lot of that had to do with finally getting some relief out of Apple. We're again in the area of this prior high that was touched twice. So we're in the area of a potential triple top or a breakout, and that really has to be resolved still. And again, a couple things to keep in mind here going forward. We've got this 8/8 level just overhead of 406 and a quarter. And we also have a seeker sell signal in place here that has not yet activated itself by closing below the 10 EMA. So that's definitely something that we're going to be watching. Now, a breakout here in the SOX would be really positive for the NDX overall, and especially with regard to the relative strength chart, which I'll put up next. So here's the relative strength chart, or the comparison chart, if you will. This is a ratio of the NDX divided by the SPX. And if we can get the SOX to get into gear here a little bit, we can finally shake off maybe some of this relative weakness that's been so persistent. But certainly the SOX is going to be key here, especially since the other leading index, the BTK, is fairly mature in this move. So we're going to need some new leadership and some rotation. So let's keep an eye on this NDX XPX cross and see if the SOX can develop some lasting relative strength here. Here's a look at the oil services index, the OSX. This was a good performer on the day, nudging above and closing above this area of consolidation and congestion. If we continue higher, this 7/8 level is a relatively minor level. The only teeth that it may have is that it's still in the area of this prior high. The more important levels are going to be the 8/8 level at 237.50 and also the static trend line here off of this 9-bar drop. The static trend line is coming in around 236 3/4. So those are going to be the trade 2 levels if we continue in this direction. MACD is still on a buy. We're above the 0 line here, so we have a chance here to gather some momentum. The banking index, the BKX, was positive on the day, but it's still here, just boxed up in the same range. Hasn't been able to clear the high of this range, nor has it been able to settle and follow through below the 10 EMA. So there's still short-term positive and trapped in this range. One thing I'm going to be keeping an eye on here is the MACD to see if this starts to roll over. Here's a look at the BTK, the biotech index. This is still fairly negative. We had a distribution day today where we closed below the open on a fairly weak day. This was definitely relatively weak versus the major averages. It was down about 0.6%. We do have our seeker sell signal still in place. It's still a ways away from the 10 EMA to activate itself, and right now we're gaming the risk level. So this has been a pretty powerful move to the upside here. It's still holding above this prior breakout, which is key. So we're going to have to watch this to see if we can either break this risk level or roll down and take out the 10 EMA to give us some kind of a definitive look as to which way we're heading next. XAU was the last laggard on the day, just boxed up here and still doing nothing. Still kind of a source of funds here for the market overall. Nothing new technically in the XAU sector. I want to take a moment now and take a look at the comparison chart of the OSX, which is represented here in the red graph versus the oil futures, which are blue. Oil futures have been boxed up here and really haven't been able to get much up and above this $93 area that's been congestion for them. We're up at 94 1/8 right now as of yesterday's close, but we really haven't been able to pull away from that draw at $93. One thing that we need to pay attention to is that the OSX did in fact clear that range today, that consolidation range. The importance of that is that the OSX tends to lead oil futures. So if the oil services are breaking out and making good on a move up here, we would expect that oil is going to follow, rather than the other way around. A lot of times, if oil's going up and the oil services are kind of reluctant to join and are kind of lagging, what usually happens is then it's a false breakout, a false move in the oil futures because you don't have confirmation from the underlying stocks. Right now, we've actually got potentially just the opposite here. We've got oil services breaking out, and crude should be lifting and following. So definitely keep an eye on those two plays. All right, now I just want to go off script here just a little bit and talk specifically about Apple. I know this is not really stock review session. This is really the preview for tomorrow's trading, but I think it's worth noting that there's some important technicals developing in Apple. First, I just want to point out just the overall trade, the way things have been working out. We had this drive up into this area right around 640, 650. Then we had a pretty decent pullback that was expected because we got an exhaustion warning up here. We pivoted back up here, drove up to $700, and then have fallen back again. I just want to point your attention to this shaded area on the chart right here, which is the MOB, the MOB, the make or break area, which is an advanced get feature on eSignal. This is a very important area that the chart will draw to, but needs to hold. It's where the pattern makes or breaks itself. It was kind of expected that we would drop down into this area, designed, by the overall design, the technicals. This make or break area is derived off of this swing low right here that we got in late Q2 2012 in relation to this high here in Q3. So now what we're doing is we're just kind of taking this price action in time and price and kind of projecting down to this key area of support. So we're down to this 480 area, which is the very bottom of this key area. So this is just one piece of evidence that Apple should have very, very strong support here just below that 500 area. While this is a weekly chart, what I'm going to do now is turn our attention to the daily chart and talk about the Tradesight signals that we've been given recently. All right, now here's a look at the Apple chart in the daily time frame here, and in this one we've added the Tradesight Seeker tool. We've got our 1 through 9 setup phase completed twice here, and now this one's active, and we actually produced a 13 down here, which is our buy warning. So we're looking for exhaustion to happen, and that also lines up with this advanced get MOB. We've used the bottom fringe of this as support, but more importantly we're also seeing that the risk level associated with this exhaustion buy right here is also come into play and has held so far. We dropped down to this 481.5 area, which is where this risk level is, which is our ultimate uncle level and the stop loss for this buy signal, but so far it's held. Now this is not a standalone indicator, but it certainly can be. And the complementary indicator or study, if you will, is the Tradesight Comer, which I'll bring up now. All right, so here's the Tradesight. Here's the Tradesight Comer. It's a very similar study to the Seeker. It uses the same methodology to print the green numbers 1 through 9 in the setup phase. Where it varies is in the countdown phase. And it's a little bit different in that it's generally a little bit more conservative. And you can see that we already had our 13 exhaustion on the Seeker, which tends to be a little bit more aggressive. We're still waiting to get that 13 exhaustion warning for the Tradesight Comer. We're actually at candle 12 here as of this low close that we had just 48 hours ago. And we're just one low candle away from getting the 13 buy signal on the Tradesight Comer. So if you take the three things together, the Tradesight Comer, that's just one trade away from a buy signal, the Tradesight Seeker, which is in a buy signal right now, and put that in combination with the MOB or the MOB here. So we've got three things that are pointing to Apple having support here and pivoting back to the upside here. So definitely stay tuned for that, and I just wanted to make sure that you had these technicals in front of you, because I know there's a lot of cross currents right now on Apple, and there's a lot of flipping, if you will, right now, where people are just flipping around their opinions with every tick, whether it's up or down. But what we like to do here at Tradesight is we go with the technicals, and we try to approach it in an as objective a mindset as you can, and that's why we go to our hard studies here with the Seeker and the Comer, because they are completely objective, and they are calculated automatically on the charts, and you can't change your opinion on them. They are what they are. So we've got strong support here in Apple, and we're looking forward to seeing hopefully something positive happen and get a new trend here started that we can play off of. Well, as always, thanks for listening, and this has been Rich Derrick from Tradesight, and please feel free to leave comments. We welcome them, and we hope to see you again soon.